All right, if you're living in Georgia and you've got a 401k, listen up because this is for you. We're going to break down exactly what you need to know about the taxes on your retirement withdrawals for 2025. So let's get right into it. So you finally hit that magic number, 59 and a half. The doors to your 401k are finally open. But here's the thing. When you start tapping into that nest egg, are you really ready for the tax bill that's coming? Honestly, this is the thing that catches most new retirees completely off guard. Okay, so the first thing you've got to wrap your head around is that this isn't just one simple tax. Nope. When you pull money out of that 401k, you're actually fighting a battle on two fronts. You've got Uncle Sam on one side, and then you've got the state of Georgia on the other. So let's tackle the big one first, federal taxes. This is usually the biggest piece of the puzzle, the first hurdle you have to get over. Now, here's the really crucial part. The IRS, they don't look at your 401k withdrawal and think, oh, that's special retirement money. To them, it's just ordinary income. That's right, it's treated exactly the same as a regular paycheck you'd get from a job. That means it gets piled on top of any other income you have for the year, and then it gets taxed. And because it's treated just like any other income, there's no single flat tax rate. It's not that simple. The actual percentage you pay depends on your total income for the year, which will slot you into a specific tax bracket. And those brackets can range all the way from 10% to a whopping 37%. You can see how that creates a ton of uncertainty if you're not planning for it, right? Okay, so once you've got a handle on the federal side of things, don't forget, there's that second layer we talked about. Let's dig into Georgia's state tax. Now, unlike the complicated federal system with all its brackets, Georgia keeps things a little simpler. It's a flat income tax rate, and that number is 5.19%. So let's just put these side by side for a second. With the feds, you've got those variable rates that can go up and down depending on your income. But here in Georgia, you've got this additional flat tax layered right on top. It's really two completely separate tax hits you need to be ready for. I know, that might all sound a little daunting, but hang on, because this is where the story gets good, especially for us here in Georgia. There's a massive advantage, kind of like a secret weapon, that's built right into the state's tax code for retirees. Yep. Even though Georgia does tax retirement income, it also offers this huge tax break specifically for retirees. And believe me, understanding this is the absolute key to smart planning. And here's the first big number you need to remember. $65,000. Seriously, this number is a total game changer. So what does that mean? Well, for the 2025 tax year, if you're a Georgia resident and you're 65 or older, you can exclude up to $65,000 of your retirement income from your state taxes. Let me say that again. Your first 65 grand that you pull out could be completely free from Georgia state taxes. That's huge. But what if you're not quite 65 yet? Maybe you're looking to retire a little earlier. Don't worry, there's a number for you too. And that number is $35,000. So, if you're between the ages of 62 and 64, Georgia lets you exclude up to $35,000 of that retirement income. It's not as big as the $65,000 for sure, but it's still an incredibly powerful tool. Just think about how this works in the real world. Let's say you're 65 and you need $70,000 for the year. With smart planning, you could potentially pay Georgia state tax on only $5,000 of that. See? That's the power of knowing these numbers and planning around them. Okay, so knowing all these rules is one thing. But how do you actually use this information? What do you do now? Well, it really boils down to a simple 3-step action plan that puts you back in the driver's seat. Step 1 is to just assess your situation. You got to know exactly where you stand with your savings and your goals. Step 2, you build a strategy. This is where you create a personalized withdrawal plan that takes full advantage of those Georgia tax exclusions we just talked about. And finally, step 3, you put that plan into action and you review it. You have to check in on it regularly because things change, your life changes, and tax laws can definitely change. All right, let's wrap this up. What's the big takeaway here? Why does all of this planning matter so much? You know, it really just comes down to a choice. The cost of not planning, it's pretty steep. We're talking about surprise tax bills that hit you out of nowhere, watching your hard-earned savings get eaten away, and just a lot of stress and uncertainty. But the reward for planning ahead, it's huge. You get to keep more of your money, you maximize your income, and most importantly, you get peace of mind. And like the source material says, failing to plan for these taxes can lead to reduced retirement income. Think about that. it's not just a missed opportunity, it's something that can actively shrink the nest egg you've spent your entire life building. So that really leaves us with one final, really important question for you to think about. Knowing what you know now about the 2 tax hits and these powerful Georgia exemptions, is your current 401k plan truly optimized for living here? Because taking the time to honestly answer that question, well, that could be the best financial decision you make for your entire retirement.